Hey guys, just in the office here. Thought I would share some figures with you. So, got a client at the moment. I'm not doing the finance on this one. The finance is getting done through somewhere else. My investor client's been great enough to provide me with some numbers. So the numbers he got from the people who are providing this co-living investment property. So co-living you can put down to boarding rooms, shared living, that sort of thing. What we're going to do today is run over these numbers just so you've got an idea of how these things work. If your mind kind of operates like mine, some of these things are actually easier to look on a spreadsheet, and you can look at the costs and you can look at the expenses and all the numbers, and you can kind of figure out from there, all right, what does this investment look like from a numbers point of view? And I think that's really important because a lot of people get sucked in about the look of a property. Personally, I've seen properties. I made probably the worst decision I've made in terms of missing an opportunity by not buying what people would call a slum, and they would laugh at. That area which I was going to buy actually doubled in 12 months. I chose somewhere else. It performed okay as well. It performed well. The point I'm trying to make is the numbers actually tell you a bit of a story. And obviously with people chasing returns, which I think is a healthy way to look at things in terms of investing, I think looking at these numbers is really important. At this point, I'm not a financial advisor either, guys. I'm a mortgage broker. I do debt. So just keep that in mind. I'm really just sharing this stuff because I'm passionate about helping people make it financially. And I believe the traditional ways of property investing that we've become accustomed to over the last 20 odd years don't actually work in this environment. And how do I know that? I know that through looking at spreadsheets like the one we're going to look at today. Obviously, the numbers are different, but let's get into it. We can see here that this property is a 5-bedroom co-living house. We've got some numbers here. So this client is buying some land and they're constructing the property. So it's going to be a new property. So I already can tell from that you're going to get some depreciation on that property, or tax deductions, I should say, via depreciation. The land is 193. This is in a capital city in Australia. I believe this is in Perth, this property. Stamp duties are cheap. I think it's not stamp duties are cheap everywhere else. I think stamp duties are just expensive here in Victoria. But we can see there are the upfront costs. Stamp duty, let's call it $5,000. All of your typical fees, note the borrowing costs in there are nothing. They're probably built into the loan amount, I should say, which is why it's not an upfront cost. 1B sign-off, that's interesting. I don't know what the 1B sign-off is, and that will be something particular to whoever this agency is, or buyer agent. Maybe that's a deposit. Maybe that's okay, a commitment fee, which is an upfront cost. Interest costs, so obviously they're factoring in a bill time of 34 weeks here from settlement, and that's how much they're allowing for interest. Furniture, so we can tell here that this place is going to be fully furnished. From the finance, you can see that they're doing it on a 80% lend, which means they're putting in 20% of their own money plus whatever the costs are, whatever those upfront costs are. All up, that's $197,000 they have to find. Now, you might think, well, that's a lot of money, and don't get me wrong, it is. But if you look in kind of comparison to what a lot of people's houses are worth, like if you've owned a property for 10 years, the capital gain on that property, no matter where it is going up quite a lot. So the 197 sounds like a lot, but if you've owned property for a while, definitely doable. The one thing I'll point out here in this strategy is if you've only got 197 or 200 grand, let's call it, you've only got 200 grand available equity that you can draw out of your existing properties. Maybe this is not for you, because it basically means you putting all your eggs in this basket, maybe buying something that's cheaper, and sure, it may not get as much yield, but you're not getting that putting all your eggs in the one basket thing. Maybe that is actually better for your situation. So I know I go on about yield all the time and cash flow all the time, but at the end of the day, that's not the only considerations. Again, I'm not a financial advisor, but I don't like the idea of going all in, so to speak, or not being very diversified with my investments. That's just my risk profile because I know, if that particular investment doesn't perform so well, I've got no more capacity to go and buy something else, and hopefully that other thing goes well. Anyway, let's continue here. Annual expenses. We've got the interest, 6.8% mortgage, which a little bit higher than normal, but for this type of investment, it's actually a pretty good rate, in my opinion. Council rates, electricity, water, and internet are all covered in there. $4,000 for a 5-bedroom house. I'm not sure how accurate those costs are. Property management fees, 12.5% plus GST, so that's significantly higher than what a normal investment property would cost to manage. Obviously, with a rowing house, the idea is that the tenants are staying there for a shorter period of time, and the property manager has to, when one tenant leaves, they have to kind of obviously fill that space. So obviously with the one investment property, they only have to do that once, but with 5 bedrooms, there's a lot more of that going on. The maintenance, house and landlord insurance there. So your annual income, which is probably what everyone's been hanging around for to see what the income is. The income on that property is $1,900 per week. Now, it's got their annual vacancy allowance, $2. I don't know if that's a mistake or what the situation is there. Okay, so I'm picking some holes in the numbers here. The clients actually gave me physically what they were provided from who was promoting this property. So the numbers that are in that I've put in, or my team have put into this spreadsheet, are correct. It's just they don't add up because $1,900 per week times 52 weeks is $98,800. Yeah, not sure what the allowance would be there. Maybe the allowance is minus $3,800 for the year. I don't know. That sounds pretty low. But let's continue on based on these facts, or maybe that $1,900 is they're factoring in kind of that into the $1,900 already. But based on that, per room, it's $380 per week. So I know that sounds expensive when you look at renting out a house, but these people are renting per room. So it is a little bit different. Maybe the rents in Perth are just high. I don't know. I don't know the inner capital city rents because I'm out here in the burbs in Melbourne. But anyway, the serviceability cost inputs, they're saying based on these numbers, you're going to have a net income of $27,740 per year. Sounds like a good amount, and don't get me wrong, it is, but they've got to be factored in with a bunch of different stuff. And, this isn't going to suit every investor. As I said before, it might be too much of a stretch to put that total $200,000 required in. So added on here in the sheet, it's got your total depreciation. So obviously that's tax deductible. It's got your gross yield, which is kind of more important. It levels out when you're looking at numbers of different investments. There's certain measures where you can look across different investments and go, okay, well, it's easy to compare kind of an apple with an orange, so to speak. So gross yield, 14% on that. Okay, so these calculations are a little bit it'll be hard to understand here, but your gross yield is basically your $27,000, which is the net income. So that's supposed rental minus the expenses, $27,740 over the total cash you put in, and it equals out to 14%. So that's cash on cash return. Pretty good. A little bit less after tax, 11.9% net. But your gross 14, if you can get that on a performing asset, that's going to be really awesome. Obviously, with this property, it's got the numbers here with the depreciation figures as well. So obviously the situation here with the house being new, there's a bit more depreciation going on. So the tax due with no depreciation getting claimed, we can see down here would be $9,000 after tax because of the negative gearing that's being applied to it, or because of the, I shouldn't say negative gearing, because of the deductions that are being applied to it, reduces down to $4,036. Apologies if I said negative gearing before in there. I'm just so used to saying negative gearing instead of deductions on these videos. But that's a basic rundown of this. Now, to give you some idea, this build is due to be done, completed in, I think it's August. It might be July. So we're not far away, a couple of months away. This will be really good to basically engage with the client, see what they're actually getting in terms of the income, see what the actual hiccups are to this stuff, because none of this is easy. Like, none of it's straightforward. Otherwise, everyone will be doing it. If investing full stop was easy, it wouldn't be a thing, because everyone would be doing it and there'd be no returns in it. So I'm really interested to see this client's situation and how they progress, what challenges they have to overcome, and at the end of the day, what their numbers actually look like, because all of this is just projections at the end of the day. If people are interested to get in touch with the buyer agent of this client, I'm happy to pass those details along. I actually haven't been given permission, which is why I haven't published their details. So I've been given permission by the client to show this, which is owned by the client, but the actual builder developer, I've hidden their details for that point, but I know who they are. So happy to pass those details along, guys. I'm not getting any kickbacks off of these guys. They don't know who I am. Maybe in the future, if I send them some clients, there might be something in it for the community. But at the moment, nope, I'm just publishing these numbers for basically people to look behind the curtains a bit. Excellent. If you've got any questions, if you're interested in financing any of this stuff, or you're interested in high yielding investments in general, I'm always happy to chat. You'll be able to find my details. Cheers.